Good morning. This is Tom Alexander. It is Saturday, August 13th. It's about 11:40 a.m. Eastern Time in beautiful Charleston, South Carolina. A lot to talk about this week. We are in the process of quite the barn-burning rally. I think it has surprised a lot of people. There could be much more room to the upside. I do not think the current rate of change is going to continue, but let's take a look at the charts and we'll get into some of the details. Okay, on my screen, you see the four primary U.S. trading indices, the cash charts. The cash charts are the most important charts. You can see the extent of the rally in each of the indices off the June lows. We essentially had a bull market in a couple of months. Okay, so you can also see on this chart, and I'll talk about this a lot next week, when you're in a trend, especially a bull trend, the immediate levels to watch, the previous day's low or the second day back. And I have those areas highlighted on this chart in each of the indices. As long as all four of the indices do not close below those levels, then you expect up higher highs in one or more of the indices. Could we have an inverted V-top? We could. If we're going to, though, the signal is that all four of these indices will close below last Thursday's low. That's all you need to know. I don't care what magic you're using to trade. That's all you need to know. To the upside, as you can see, we are in the NDX, actually. We are at a level. So since I'm talking about the NDLX, let's just expand this. Above this level in the NDX, you're in an elevator shaft that extends all the way up to 14,273. Now, if we get above here, that doesn't necessarily mean you're going straight there. It just means from an auction market perspective, in terms of price action, in terms of volume on the horizontal scale, there's nothing of significance until you get up here. Now, and this is where the market profile people all get it wrong. They're going to say, oh, well, there's a volume node right here. Well, yeah, there is. But what they do is they ignore the 421 conviction to the downside that erases this volume in here. Now, could the NDX stop on a dime here? It could, but it won't have anything to do with the volume here. It will just be coincidence. It won't be causative. A lot of conviction to the downside here. If we start to generate momentum above here, again, there's nothing between 13,561 and 14,273. Do I think we'll go straight there? No, I don't. But I'm just pointing out there is nothing objective of previous price behavior that would alert one to, okay, this is the level you really watch. The next level to really watch based on information at hand is going to be 14,273. Okay, in the Russell, you're looking at 2060 as the next important level. In the Dow, you're looking at 34,119 as the next important level. And then in the SPX, the S&P, you're looking at 4308. Now, if we get above 4308, there's nothing until around 4500. Now, I realize the round number crowd will come out of the woodwork and talk about 4400. And, who knows? Maybe we stop there. But based on information at hand, 4308, this area where we have these previous highs, you always use price action. And this is market activity generated by actual buyers and sellers. There's no magic involved, but we could stop anywhere in here. I do not think we will continue a whole lot higher at this rate of change. even in strong bull trends, which this certainly qualifies as a strong bull trend, you're going to get minor pockets of retracement. We had one in here, we had one in here, and I think we'll see one next week at some point in time. How much retracement is created remains to be seen. But again, as long as at this point, we don't close below last Thursday's session low in all four of the indices, then worst case, you're looking for a rotational market with higher, slightly higher highs in one or more of the indices. Things get choppier on a day-to-day basis. So that's where we are on the bar charts. Now let's take a look at the profile view, which is particularly interesting and provides a great lesson at this point in time. So if you look at my screen here, this is the daily profile. Now this is the ES, is the futures contract. So that's what we're going to look at it to make this point. Now you can see there's a migration of value higher. You had higher value here. We have higher value here. What you're looking at are monthly profiles. So each letter represents 1 day of trade. Now to get inside, and this is how you want to use any chart. You want to use any chart to help you determine market condition. You know, market profile is not a trading system. It is a tool to be used to an end. It's not an end in itself. Okay, so we split this out, split out July trade, and we have a classic, just an incredibly classic view. My screen is stuck, so we'll have to unstick it and start over again a little bit. So we have a classic view of the auction market process. The auction market process is basically a three-step process. And this process is in effect in all degrees of time all the time, whether you're looking at a 1 minute chart, a monthly chart, a daily chart, etc. That's what makes the method so extraordinarily robust, is that you do have this consistency across time frames and how markets develop. Okay, so I want to grab a drawing tool over here. And so here's the three-step process that we have that is so elegantly consistent and displayed. We have a step one, then we have a stopping price. Now, you can't determine the step two, which is the stopping price, until after the fact. But this is step 2 and 3. You have development, you have some balance that occurs, and then you have a breakout of balance and another step 1, which is a distribution. You have a distribution range. Then you have the step 2, again, only identifiable in hindsight. And then you have step 2 and 3, and then you have another break. So we are in another distribution. We're in another range finding phase of the market. And just as we had these furious rallies that paused and balanced, we're in a furious rally, and it too will pause and balance up here. So this is what we're looking for now, sooner rather than later, and is likely to begin to occur next week. I don't think you're just going to see this market just go from here straight up into whatever next level it is. It's certainly not going straight up to 4,500. Maybe it goes to 4,350. Maybe it goes, who knows? Maybe it stops on a dime in here and chops around for a while. But this is what you're looking for next on a day-to-day basis. Okay, let's get rid of that. So it's fascinating to watch this auction process play itself out over and over and over again. And this can give you a huge edge regardless of the time frame you're trading. Even if you are a short-term intraday trader, this helps give you context of what the next day is most likely going to be like. And again, the important downside level now in the market for the uptrend is here. It's last Thursday's session low, cash session low. So this is your key reference area to the downside heading into next week. The immediate level to watch to the upside is 4308. Okay, let's take a look at the internals. And we'll start with the price breadth chart that we talk about every single week. And this is classic bull trend behavior. And I'll point out a couple of different things. Let's start with breadth. If you notice down here, what isn't happening is breadth, and I'm going to show this on the 30-minute chart in a minute. Breadth is, we haven't had a negative 2000 reading in a couple of months. That's, even in a bull trend, you're starting to be on watch for that occurrence. This is similar to this period back over here where you had this, off of this low right here, you had this phase where the market was relentless to the upside. And then you had your negative 2000 day, and then that sort of was the kickoff to the most extended retracement that you'd seen since this low. Well, we're sort of on alert for that. Another reason to be sort of cautious about how much immediate upside there is without some sort of balance involved that includes some retracement. 10-day moving average is losing some momentum. It's diverging against these highs. Now it can turn up again, but I would be shocked if the 10-day moving average exceeds this recent peak before we get some sort of relatively significant retracement. You know, the 5-day moving average is also diverging. Breadth has been very strong. And let's just take a look at, let's take a look at the 30-minute breadth. This is a nice segue into that. Okay, so this is, and this has been fascinating to watch, and I encourage you to go back and look at the recent reports over the past 2 or 3 weeks, because I pointed out way back over here that if it's different this time, you would see continued higher highs in price and lower highs in breadth. You can also see very clearly here, the market has not been able to generate any internal downside momentum as measured by breadth. We haven't been able to get even intraday below negative 1200. So that's something to watch for. What could play out is we begin to make even more extreme lower highs in breadth, and we make slightly higher highs in price until we get something and we have some sort of 3 to 5% correction, which is at a minimum, which is normal even in bull trends. So that's sort of where we are. I'm going to go back to one other thing here. Let's take a look at VIX. And I have been pointing out for weeks now in the report that a declining VIX was bullish for the market and could add fuel to the fire, and that continues to be the case. VIX is closed below 20 for the first weekly close below 20 since way back here in April. So I would expect next week to see higher prices. I also would not be too, I'm expecting a slower rate of change to the upside, and we are getting closer and closer to that 3 to 5% retracement, even if we are in a bull market and the S&P is headed to 6,000 or whatever the latest and greatest predictions are. Guys, do me a favor. If you have found value in this, please subscribe. Hit the notification bell and you will be notified when I post something to YouTube. If you like the video, like it. Thank you. Have a great weekend, and I'll speak with you again soon.